Let's also connect with Manoj Muralidharan, who's joining in on the technicals. And Manoj, going by the kind of past history that we've had for the month of March, last year we gained about 4%, and in the year 2020, of course, that COVID year, we shaved off about 23%. What's the expectation for this month, and what's your outlook on individual trades?
Good morning. There are a couple of important things that I guess we need to look into. First of all, the previous month, obviously, it's because of the event which is your union budget. You have a higher hedge ratio from the FI side. Now, hedge ratio is nothing but simply the amount of Nifty future short that you carry for the entire stock positions or the market wide position that you have in terms of stock futures for the current month. But this month, even in the March series, we have seen when we started the new contract, we have seen this hedge ratio is up to almost 10.1. Usually, we see it close to around 6 to 8%. So the view here is there is concern in the market, and the most important thing is there is shorting in the Nifty future. So that is a healthy sign. At least the market is not complacent about getting bounced and there is no hedge position in place. No, so there is certainly hedge in place. So we believe that this question of 300 to 400 odd points in terms of correction, if that happens for the index, that might certainly be a good level. So we believe 17,200 to 300 might be the base for this month of March, and there is a possibility of almost 17,850. The reason I am mentioning 850 is because this entire 1 crore, almost 1.06 crores of positioning that is there in the Nifty March futures, that has a weighted average price of closer to the same value of 17,850, and it is the banks and the bank Nifty which are not really helping, or maybe we are seeing more selling from that side. So the view here is it's a good 700 odd points range that we are expecting for the March series, with 17,200 to 300 as a base maybe, and around 17,850 as the top.
Right. Okay. And Manoj, what stocks would you recommend to our viewers?
Well, stock specific, there are a couple of them, at least in the Nifty 50 itself, where we have seen good buying, and I believe it might be more from the stronger hands or the institutions, and because they usually choose arbitrage as a simple way. Arbitrage is nothing but when you create a cash position by taking delivery in the stock, and you see a relevant derivative shorting which goes on rolling every month. So to top the list, I guess Tata Motors at obviously 385 to 388 is where the arbitrage started. But even now, we believe that the levels of 4 to 20 to 25 is a good level to go long. The stop loss should be closer to 415, 417, and we're expecting the stock to ideally do 436 to 440 for this month. So that should be a good buy. Now, from the banking pack, we believe. If you remember the event for HDFC and HDFC Limited, it came in April, and then we saw the unwinding happening in December. So HDFC Bank has not really crossed the 1680 levels, and we have been seeing some positioning shift from HDFC Bank, and there is shorting happening in the derivative side as well. So if you get HDFC Bank futures closer to 1618 to 1620, that's a good level to short. A stop loss of 15 will be 1635 for a target of 1580 on the stock is very much seems prudent at this point.
All right, there you have it. Those are the top trades to watch out for in today's trading session.